In this video, we will talk about how to use the Magenta Trader software to analyze some stocks. The Magenta software is simply a technical analysis interpretation software. What that means is that it takes all the important technical analysis data, and by the way, if you don't know this by now, there are tons of technical analysis data out there. But what Magenta does is it uses algorithm to analyze the most important technical analysis data out there. Then it puts it in easy to read words so that you know what action you should take each and every day. Take a look at the chart of Dollar General. On March 31st, Dollar General was signaling that there were some opportunities to start buying. On March 31st, if we look at the condition up here was showing that it was strong, and the trade action was a buy. The buy here tells us that based on technical analysis data, there was a strong condition of buying taking place with Dollar General. The very next day, it suggests that there was still more buying taking place with Dollar General. After that, it says, don't buy anymore. Part of what Magenta does is it takes the technical analysis data and tries to see setups ahead of time. The faster and earlier we get into some of these trades, the better your opportunities will be. By this day, April 2nd, it was saying, hold on, don't buy anymore, probably because the price have moved quite a bit at that time. The following day, it says, hold on, don't do anything. And by April 6th, it was saying the same thing still, don't do anything. The first day that we see a bearish candle, a red candle, most people would have looked at this. Those who understand candlesticks would say, this is a bearish signal. Maybe the market is ready to go down. But Magenta analyzes all the technical analysis data that is out there and says, no, just hold on to your trade. Market condition is not strong. It's fair. It's not really weak, so you shouldn't really be looking to short this market, but you don't need to sell either. Just hold on to your positions. The day after that, it now says, market is getting a little weak for this particular stock. Maybe it might not be a bad idea to place your stop. On this particular day, a trader would have gone in there and placed his stop at the low of that red candle. The next day, market condition was still weak. Magenta was suggesting still keep your stops in place. As a matter of fact, adjust your stop to the new low, which would be this candle right here. After that, the market went higher, but Magenta suggested don't buy anything else. If you were not already in this trade, you have to miss this one. Sit on the sidelines, find another stock. However, if you were one of those who actually got in when it first suggested buying down here, just hold on to your positions because things are still looking okay. We had another red candle, and it was a long wick that we can see, but Magenta was simply suggesting on that day, don't do anything, hold on to your position. The day after that, Magenta now suggests this stock is getting weak. The trend is getting weak. It might not be a bad idea to place your stop. The next day, it says place your stop. Now, if you had placed a stop on the first day it told you to place your stop, on this day, you'd have been stopped out. Now, notice what happened ever since then. Market has gone sideways, and Magenta was able to help you capture that nice trend and get you out before it started going sideways. That is the power of being able to use technical analysis data that matters. Let's take a look at another stock, Walmart. On the chart of Walmart, starting around approximately the same time, April 1st, we can see that the condition was strong and the trade action was to buy. The next day, the condition of Walmart was still strong and more buying was beginning to take place. Traders at that point in time would have noted that and tried to start placing trades, getting into Walmart as early as possible. On April 3rd, market was still showing that it was strong for Walmart, and there was still more buying taking place, as well as April 6th. After that, we see our very first red candle, and when most people probably start panicking, wondering whether they should take their profits, should they be selling, Magenta simply suggested that looking at the important technical analysis data, all you have to do is just hold on, don't do anything. The next day was another red candle, and most people would have been spooked by now, but Magenta still suggested using the important technical analysis data out there, the ones that really matter, it's not really telling us to sell yet. Yes, market looks bad, but overall, things are still okay. That would have spooked a lot of people because the very next morning market dropped significantly in the morning, but by the end of the day, it rallied back up. Now on this day, because of the volatility, Magenta comes in and says, place your stop at the low of the day. Fortunately enough, the next day, market went higher, and it went higher, but Magenta was now suggesting no need to be buying. Now, most people, most traders that analyze charts would have said, let's buy this breakout. But what we see here is that Magenta was saying, no, don't buy no breakouts. Don't place any stops. You should not be selling. Just hold on to your positions. And if you were not in prior to this, then don't chase the stock. Wait on the sidelines. The next day, market went higher and higher. And by this day, on April 17th, again, Magenta was suggesting place a stop. Those who were in the trade from the beginning would now be able to place a stop somewhere around that day. The next day turned into a bearish candle, and Magenta was suggesting, look, now the market is getting weak for Walmart. The trend has become weak. Place your stop. And on the very next day, anybody who had placed their stops using the Magenta software would have been stopped out, only to see that this was one of the best decisions you could have made with the stock, because since then, it has been going down. Let's take a look at this stock, Abbott Laboratories. The same conditions applied. On March 26th, Magenta looked at all the technical analysis data for Abbott Laboratories and suggested, based on what is seen, the trade condition was strong and the action to take was to buy. The next day was a red candle, which technically we don't like buying on red candles, but it was showing that there was still buying take place, which is kind of interesting. And then the market went higher, but still ended as a red candle. And even on that day, it was still suggesting, we're analyzing the important technical analysis data, and it's still showing that buying is taking place. The day after that, even with a down day that closed even lower, Magenta was still suggesting there's still buying take place. Now, most people would have seen this and start thinking, wow, it's time to short. Especially when it came down here, most people were thinking it's time to short. But understanding the technical analysis data that is important would have said, no, yes, the price had moved down. However, the overall technicals were still improving. And that's what the algorithms of Magenta software does for you, and comes out there in plain words what the trade action should be for that day. In this case, the trade action was to just simply place a stop. The day after that, which was April 2nd, it suggested even buying more. And then on April 3rd, it suggested buying more. And then after that, it said, no more buying, no more selling, don't do anything on this day. The day after that was a red candle. And this is where people might start getting worried about one day up, one day down, volatility. But again, looking at the important technical analysis data, it was saying all you have to do was just hold on if you were in the positions or sit on the sidelines. The day after that came and price kept on going higher. And notice how Magenta is just suggesting through the trade action, hold on to your trades. On this day right here, this was the day when earnings came out, it says place a stop. But outside of that, the stock just kept on going higher. Now it's interesting that now the condition is getting weak. Magenta is able to see that the trend is getting weaker even though prices were going higher. So at this point in time, even on a solid green candle, it is suggesting that we place a stop. The day after that, it's letting us know the condition of this trend for this stock, Abbott Laboratories, is getting weak. Place your stop. On this day, even though it's a green candle, it's still saying, look, do not get sucked into thinking that this stock can go higher. The trend condition is weak. Place your stops. And on this day right here, you would have been stopped out. Notice how Magenta allowed you to get into this trade, stay in for as long as possible, and get you out before the tide turned around. We'll use one more stock, which is Zoom, because a lot of people know about Zoom. A lot of people are using Zoom. Well, how did Magenta help us and guide us through trading the stocks of Zoom? On April 13th, we see here that it was suggested the condition for Zoom stock was very strong, and there was a lot of buying taking place. The day after that, there was still more buying taking place, and the condition was still strong, meaning that the trend was just beginning. Day after that, there was still more buying taking place, and more buying taking place on the 16th. 5 days into it, then it says, let's hold off on buying now. The strength of the trend is not as strong as it used to be anymore. It's getting weaker. Let's just hold on to what we have. Notice what it did not say. It didn't say we should sell. It did not say we should place a stop. It just said hold on to the trade. The day after that was a red candle. It gapped up in the morning, ended up down as a red candle. However, Magenta software was still suggesting through the algorithms, just hold on to the trade. The very next day would have spooked a lot of people. But after everything was said and done, all Magenta wanted us to do, after it looked at the important technical analysis data, was to place your stop, which you would have done by placing it somewhere down at the bottom of that red candle. The day after that, market went higher, and then it went higher. Now on this day, this is where a lot of people will be trading the breakout, because they would have seen this breakout taking place somewhere around here and say, wow, this is a solid breakout on high volume. Let's go in and trade this. But notice what Magenta was suggesting on that day. Said, yeah, it might not be a good idea to buy this. Let's not chase this stock. And what ended up happening was we had a red candle the very next day. It said place your stop. At the morning of the next day, it would have stopped you out. And even with this green candle closing strongly at the end of the day, where it might have tricked some people into trying to get in, Magenta was suggesting, no, you do not want to get into this trade. And because of that, we can see how, again, Magenta could have got you in early in the trade down here, got you out of the trade somewhere over here, and avoided this turnaround.